Perfect. Good morning, guys.
Good morning, Kay.
Hey, good morning.
Good to see your screen.
Thank you. We got a we got a party happening today. 1 second, and it's kind of wild. I at least I think it's kind of wild. Um, looks like we have over 160. Hold on. Yeah, I think it's like over 160 people who are saying they're going to attend. So it's gonna be fun. It's gonna be a fun party. Let me see. Let me just do a quick count. Show you guys a count real quick. So party wise. It looks like the party that we're happening that's happening later this afternoon. Oh, we have 160 attendees, and of the 160, we have 114 people who are supposedly coming for the first time. So that's not bad. That's not bad. Hope to see you folks later today if you're going to be joining. Let's see. Good morning, Bernard. Sorry I can't make it. Hey, no worries. No worries at all. These events are going to be happening, I think, every month, every quarter. I need to smooth it out. That's for sure. It's just something that I think at this point I want to do 100 100 networking parties, right? So today's event is going to be the 32nd networking event. So it's going to be pretty fun, right? It truly is. I truly believe whoever you meet, you never know who you meet because the next person you meet could potentially be, they say, a plot twist in your life. So I keep networking, right? So got to keep going. But for today's session, we are going to talk about the stock market for the next 2 hours here. And Bernard, I got your text. I think was it last night or was it this morning? Two stocks that I think two stocks or one stock that he wanted to look at was McDonald's. And I'm open to looking at anything and everything because again, I guess in the journey at this point for me, I'm just super. You gotta be super flexible and open-minded because you never know. You never know how something could become really big, right?
Hey,
So
Kay, can I just say something? I got to go in the car, so I won't be able to talk or
sure, sure.
text much. But the McDonald's one sort of fits in the same category of Okta and CrowdStrike, right? Where there's a sort of like a single catastrophic event where both of those companies have, Okta had the customer service hack incident, and then, the other one, CrowdStrike, of course, had the whole major incident, of course. Now McDonald's facing the same thing with onions from a contracting company in
Hmm.
in California, trashing them and the stock's down 10%. So if you look at the other two, those ones seem to have rebounded, but people seem to have a short memory, right? Where, McDonald's, I mean, how many people are really a year from now even going to remember the single event involving the onions? So is it a 10% off sale for now, or do you hold off and let it go down further? What do you think?
Yeah. So events like this, right? Again, it's exactly like so in the years of me watching stocks and how they behave or move, what you see right here is I think it's the same thing as an individual, right? Like you're right, the market has a short-term memory for some reason because we will go through several cycles of like pump and dumps, and I see it like everywhere. I mean, just in the last four weeks, we had another big pump by an AI coin out there, crypto coin out there. So I'm not surprised. But the way I say it's just like a human being, the way I look at stocks is because what you see right here is just like a broken leg, right? So when a stock has a broken leg, as you're seeing on the screen right here with McDonald's, this would be the broken leg right here. It, like a human being, I mean, what we see is abrupt sell-off, obviously, a gap down, right? So basically, news came out, something about the onions having E. coli or whatever, right, at large scale or something like that. And basically, the institution the next morning, they basically gapped it down and say, hey, I want to dump or I want to get out really quickly, right? So we don't know if it's like one player or collection of player. All we know is that the price action gapped down. So that, by my definition, is a broken leg, right? Again, like you have to have you have to define like what you're looking at. So for me, I'm looking at the 20-day moving average, right? Like for the most part, it was respecting the hyper green or the light green line right here. And then now we just gap down, traded below it, right? And then recently we had a large candle down. So the way I view it, and that large candle down was abrupt as well, down sub below the 50-day moving average. So the way I view it, it's just like a broken leg. If you have a broken leg, you need to sit out for a little bit, right? Now, in terms of like the rebound, I mean, you also have another catalyst coming up right here with the earnings that is down here, as you see the E right there. So there's also the earnings catalyst that, there's potential for a big quarterly positive news that could cause the stock to gap in the other direction. So there's also that scenario, something to think about. Uh, Hold on, let me move my screen around right here on this side. I forget. I
Just
actually.
one last thought, of course. Of course, the earnings represents last quarter, right? Outside of when this
Hmm.
whole event took place.
Hmm. Hmm.
So it's likely that, McDonald's is a high value, low cost, compared to where you went for burgers yesterday, $24 at this place in, Campbell. Couldn't believe it, right? But
Yeah.
I mean, McDonald's is clearly oriented to, lots of people going for reasonable value or low cost or whatever. So the results will probably be pretty decent, but their guidance might be very cautious, right? Because they can't assess the impact of what this whole onion thing will be, or even though it's just theoretically one burger and it's a third party company, and that
Hmm.
same company provides stuff to everybody. So I mean, it's kind of fascinating how much their guidance will be upset by this whole thing. That's what I'm kind of curious. What do you think?
Yeah, I mean, again, this is we are analyzing the conditions of the market in real time, right? And so, yes, the news initially proved to be quite negative because it caused the stock to go down quite a bit. I mean, right now, whenever you see a scenario like this right here, this is I would call it like, I mean, it's high volume, high price movement, high volatility. It's a very high emotional event. And so a stock could just emotionally go down further, right? And so when we're anticipating how low can it go, will it bounce back? Again, like the broken leg example, you got to give the stock some time to make a recovery because it actually it's just like for every other investor, right? Every other investor, institutional investor, whatever, small investor, they're all in shock right now. And so it takes time to digest. And the only thing that we could really do is like, yeah, we could say this is an emotional event right here where we sold off with large volume, gap down, large price movement, but we also want to analyze where can we possibly go down to, right? So areas of price areas with high volume where I'm drawing right here, right? You can see these are potential areas that we could go down to. And you could also see that this is a 200-day moving average right there. So that 280 mark, right, around this right here, there's possibility that the emotions could drive the price down to this range right here between 280 270. But previously from prior market action, it looks like a buyer might step in right around that price area. So again, 200-day moving average. What I'm using is the 200-day moving average, right? And then also this blip right here, this very large amount of volume action at that price point. So I'm thinking like, okay, how low can it go, right? So depending on the severity, right? If let's say investors are really scared, it comes back up, it hits resistance on the 50-day moving average, and it sells off even more, and then we find a buyer right here at the 200-day moving average around 280, 270. So if it's truly bad news, let's say, then I think that 280, 270 mark will fail and it'll go down lower on earnings. But if that buyer previously had no, that big institutional buyer, they had nowhere else to go and they have to deploy capital into the markets because inflation is happening, then I suspect that same buyer or group of buyer might come back and try to buy that area right there. So the key thing to look at now is that now that we know it's a post-emotional event, price is gapped down before earnings, there's a catalyst coming up. I would be looking at, what could potentially happen around that 280 area, right? Can we it'd be very bearish if we like you could see the sentiment like if it's very bearish that we go towards 280, right? And we could pull up CrowdStrike to kind of analyze like, oh, we have it right here. We can analyze like a scenario like that as well. So look at CrowdStrike right here, right? It went down towards the 200-day moving average. It just showed like how severe this news is, right? This whole event right here from the 50 MA to here, it showed how severe that news was. But after the event, you have that first emotional low, right? That I guess you could say impulsive low or whatever. Like people are coming in like, no, CrowdStrike's like you have the other side saying, no, it's a good company. This is like just the initial broken leg. It needs to recover. Then you have that next higher low right there, right? And then you have that next higher low. And then currently we're back at that green line where I drew at before. So this is recovery right here. And you can see how long it takes to recover, right? A stock could drop really quick. Like this stock right here dropped this stock right here dropped. Oh man, I can't grab that. It dropped. Let's see, like that's like less than a month. It dropped from 380 all the way to 220. So give it 30 days, right? So in other words, like the initial emotional drop could be like a 30-day cool down period. So we could forecast or just say from the patterns of CrowdStrike the last time they had a large scale global negative news event, it took about 30 days for a buyer to step in, for sentiment to cool down. So in other words, like if you think this is an opportunity to buy the dip, you need to pay attention and ask what was the recency of the dip, right? It's very recent. The news just came out. Not everybody reads the news every week. Some people read the news, well, some people read the news every second. Some people read the news every day. But there are other people in the world that you need to take into consideration because consensus, right? Like I've been hosting events for a long time, and I realized like it takes time for a message to get full consensus. Does that make sense? So right now, like you, I think Bernard, I think you're above average when it comes to paying attention to the stock market relative to the rest of the world, right? So this news is still it's still floating out there. It hasn't fully caught on like full consensus yet. And so we don't really know the full reactions of all the players that exist out there just yet. You have to let the let time play out and let the news travel out because this thing could pop up, right? And then another player knows that this is actually pretty bad news, and they're waiting for like a pullback sell, or not a pullback, a rip for a bearish sell, right? So I would say, I don't know, let's revisit some quantitative rules here and give it like 30 days for a cool down, see how it performs in the next 60 days and then in the next 90 days from the initial event. So that's sort of like a structural way to approach like a very event-driven situation, right? Like that's actually how us humans derive knowledge and intelligence. We add structure to things that have no structure, right? Like you add a curriculum, and that's a body of knowledge. Bernard, I think you're going to say something.
No, I appreciate it. That's very insightful. And by the way, you'll notice it was the onions that caused this whole thing, not the beef, which sort of shows you the vegetarians are killing us. Hey, I've got to run. I'll listen with unmute. So really
Yeah.
enjoy the insight, by the way. Very, very valuable. Thank
Yeah,
you.
yeah, no worries, no worries. So the key thing there, folks, I mean, it was a great question. The key thing there, folks, is like we want to don't be impulsive about like, oh, a stock is running and you emotionally react. You need to I think over the years you learn to watch yourself and you see like you understand like is this an emotional reaction? I gotta jump in and get a discount. But we know that when a stock sells off very hard, it takes time for it to come back. And a great example, right? For CrowdStrike right here to retrace about 50% of this drop right here, right? It took about 3 months right now. It took 3 months, right? It took 1 month to establish a low, and then it took about 3 months to basically get back to half of where it was. So there is no rush in jumping for discounts. That's something that I've learned. And I think in the beginning, like a lot of people, I mean, even me, myself, like we have the mistake of like, oh, dang, it dropped 20%, let's jump on it. But that's actually when the knee just or the leg just broke and you're trying to jump into a negative event because again track the characteristics of the investor or retail investor, right? Like I would look at myself and be like, oh wow, like I was being really like irrational. I just wanted to get in because I was greedy. I didn't wait for a really good price point to get in, right? Because there are better price points than chasing like falling knives, right? If you chase falling knives, expect to get cuts on your hands, basically. Some comments here. Let me go back. Morris is in Sacramento. Hey, no worries at all. It's yeah, folks. So for those of you who just joined, I'm throwing a party today for anyone that wants to come out. We have over 160 people with 114 people coming for the first time. So it's going to be a pretty fun party. It's happening later today at 3 p.m. All the address and everything is in the link right here. So looking forward to folks who come out. I got to keep networking because I think as you get older, you realize like, yeah, like that's just something you have to do. It's sort of like just it's like working out, right? You no choice, you got to go work out. Same thing with like analytical work, right? I have no choice but to do the analytical work that we do in here every week. So we're gonna look at some stocks today. It's gonna be pretty darn fun, and I'm definitely looking forward to that. John says a similar dip happened this week with home builder companies like PHM and LGIH. Let's take a look, right? Because what this is and if you folks like learn with me long enough, right, we start to see these events actually happen over and over. Like you start to realize like, oh, like these volatility events. Yeah, see like this is pretty similar to the event as well. Now this is a gap down and this was on earnings, right? So the catalyst here, the catalyst with McDonald's was before earnings. Another one that I could share with you because I was bullish on it, but then when earnings came around, it turned around was Lockheed Martin right here. So this is also another great example right here of just like, understanding when a stock turns around and how to respond to it, right? The key thing is to respond to it. So this is an example right here, right? You have to understand that the thing that proceeds that comes after a large red candle is typically more red, right? Like there's a continuation move. You see what I mean? Like a lot of times when a stock pops like this, people are like, oh, it's too late, right? Like Tesla right now. Like Tesla had earnings at gap up. People will be like, oh, it's too late, I'm out. But then like people don't like I feel like people don't realize like there's a proceeding move after that when something gaps up. And so that's why it's like you talk about this long enough, you start to see the irrationality of people, right? So like for example, like people wouldn't buy this one right here, but it's like there's a catalyst here and it's moving higher. This is the one I'd rather be buying, but then people are like, I rather buy this one because it's cheaper now. And it goes back to my mantra, which is like, don't be cheap. If you're going to be cheap, you're just trying to buy it because like, oh, it's like a quick minus 10% off the top. You're thinking you get a 10% discount. You cannot apply consumer psychology into this game of like professionals over here or with other institutions. We have to apply the institutional level thinking, which is they buy when other people buy, or there's some edge, right? And as a smaller player, I truly believe that we need to be buying when other larger whales are buying, not because we are individually thinking is cheap. That's a problem, I feel. And that's a emotion that I've learned to avoid, and I it's funny because we talk about it in here. It's great to see like I've learned to be aware of it and working on overcoming it, but then it's also interesting to see new people come in and then they express that behavior, and then over time you get enough of like that engagement with the newer people coming in wanting to buy it cheap, and then you realize like this is just the behavior of like the new person that comes into this game and then lose over and over because they this is where they think this is where the time to buy. This is actually the time to sell, right? Like reason being is that it had an earnings gap down below the 20-day moving average and below the 50-day moving average, right? And below this volume point right here at this point. So there's like several reasons to consider not to be in position with this one anymore, right? But then some people are just like, no, I got to jump into it. So it was bullish before earnings. It was bullish right here, right? And I could see that. But then earnings now you have to give it time because some news came out, the markets didn't like it, one large player didn't like it, that one large player got out. You need to understand that that large player could cause sentiment to run. So it's really truly like cattle's in the field and lightning strikes, and then they have to run for a period, and then they get tired and they ask themselves, why are we running? Same thing with McDonald's, right? And you kind of see this over and over. And we could analyze stocks that I haven't really looked at, like Pulte Group right here. So here's a great example from that John talked about right here, right? So here's an example of earnings right here. The catalyst was earnings. This is why we want to be like if you're swing trading like me, we want to be like a quarterly swing trader, right? Where we're trying to play within the boundaries of quarter, and then by the time the quarter comes, we want to take into consideration of like selling a position out because earnings could gap up or gap down, right? Unless you want to specifically play earnings and try to play the gap up or gap down. So that's a better practice that even I myself I want to improve a lot more on, right? Because sometimes I know when I try to be an aggressive trader, I lose money. Aggressive trader is like more like I guess like gambling when I try to like play like hardcore dailies and weeklies versus like when I swing trade, it's like consistent, consistently bringing in the income and stuff like that. So you got to understand your behavior, right? Quite a bit. So here's an example, right? This was a catalyst on earnings. So it sold off a little bit before earnings, but this was the earnings gap down right here. And it gapped down below the 50-day moving average. Look at that. It popped back up and it confirmed resistance right on that orange line right there. That's beautiful because that actually sets up a short, right? Because now you have confirmation, like like, oh, it hit resistance right there. There's a good chance that it could be a short, and the next day you could have shorted that bottom right there. So that could have been a play right there if you think about it. The other one that John mentioned, let me scroll back up, is LGIH, right? So it looks like this is sort of like a segment because it's everything like home builder related, right? So we sometimes when we see an event like this, we want to double check like, okay, is it the whole industry or is it just this individual stock? And those are other things that I double check and ask myself as well. So this one was no earnings catalyst, right? There's no catalyst here, but you did have a break of the 50-day moving average right there, which kind of like, I know this one's kind of choppy, right? But also kind of messy too. But you can see that all this time it respected the 50-day moving average, respected the 50-day moving average there, respected the 50-day moving average, and in the moment it failed the 50-day moving average, which I'll put in a box right here, you see how it kind of changed in direction. Because again, this works because other institutions are well, it's based off of like how other institutions trade, right? And it's also based how like trading psychology works. Not every institution trades like this, but it just works because that is the belief of the marketplace. And then now we're back below the 200-day moving average on the pink right there. Excuse me. So if we could go to XHB, we take a step back and analyze like, okay, John just showed two home builders sell off. Is it a sector thing or is it individual equity thing? So I pull up this ETF that represents the sector or industry, which is home builders ETF right here, and you can see that it's actually the whole entire industry itself. So this is a sell signal right here, right? This is a sell signal because look, for the longest time you had volume accumulate around this area right here, right? So we know that around this area support at 105. And at 105, it cleared the 200-day moving average right here, right? It popped up, of course it pulls back. It double clicked and found support on the 50-day moving average right there. It popped up, pulled back again, found 50-day moving average support again, right? Popped up, it's just how a stock moves, right? And then recently, maybe some catalyst, I don't know what, across the industry, it pulled back. It could be interest rates, as I think I didn't read John's next comment, but I did see he talked about the 10-year Treasury, which also cleared the 200-day moving average if you're watching the macro, right? So this right here, it broke the 50-day moving average, and you can see that that's confirmation of a short trade right there, right? And some decent volume came in as well. So that's something that I look at, right? So it's like, hey, we cleared the 50 MA, we still respect the 50 MA, we still respect the 50 MA here, but then here we stop respecting the 50 MA. So it's gonna go down a little bit from here. At least I expect it to like the next area, which is like the 100-day MA, right, or the 200-day MA. So these are areas where I could expect it to bounce, right? Assuming the stock is still, if it still trends, then yeah, it's going to bounce on one of these. Because it takes energy to get above the 200-day moving average. I mean, it was already because the 200-day moving average is over here, but it takes energy to get over certain moving averages. And so we need to consider that. V says yes, but doesn't it only matter what the whales are thinking and doing? Only the big boys moves a big company. Yeah, pretty much. Because I mean, my opinion doesn't matter. You could ask me all day what I think about McDonald's, and I could ask people in here all day, unless you're the institution behind the scenes. I don't think objectively speaking, no offense to anyone, I don't think any of our opinion really matters. It's the opinion of the markets, and that's really what I try to focus on, because it's the opinion of the larger institution that's moving the prices, not me, right? Me, I'm just I could be like a rager behind the screen, just like super angry, but it doesn't do anything, right? So it's just like I think it's just over time you just grow more mature about this is the reality and this is what the institutions are choosing to do, and they're choosing to bring prices lower. And so if they are objectively doing that, then I should objectively consider to respect my stop and revisit a different trade, or revisit a trade, or go to a different trade. John says, I think the home builders dip had to do with the 10-year Treasury bond yields. That's what I read. I know interest rates are dropping in the U.S., but 10-year bond yields going up seems to be a bad sign. Seems to be an overreaction anyways. Yeah, I track the rates like every week, and you folks could do it as well. You could pull up the futures tab right here, and you could click on the bond market, right? And this is something that I've been noting in the report. I know it's a really beefy report. It's really for like the very geeky person that wants to get into this. But if you've been tracking the bond markets, right, any one of these, the 30-year, the 10-year note, the 5-year, but we'll use the 10-year. That 10-year is kind of like the most highest consensus, I would say, like everyone's looking at. Really, is the 20-year TLT. We could pull up TLT, but you can see that prices have been dropping hard right here, and it's finding, currently sitting on the 200-day moving average. So when prices drop on the bond market, it's suggestive of, it's not suggestive, it's actually, well, sometimes the mechanics don't work, but when bond prices drop, rates are rising. So rates have been rising for like the last 30 days, while the markets have still been going higher. So I think rates hit harder on things like homes and loans and stuff like that. So that could be a reason. If we could find support right here, that'd be really nice because it shows that rates have a trajectory of going down, which is good for the broader markets. But right now we're basically in an earnings season. We had Tesla earnings, and next week we have big earnings like Apple earnings that it's really the earnings it seems like at this just this current setup around the world that we see, it seems like earnings is determining the direction here, right? So Apple, like last week, towards the tail end, things were looking kind of bad, but then Tesla had earnings, and then it kind of just brought the markets back to where it was. So we're still in an uptrend, but it is I can't quite say it's slowing down based off of the objective systems. There has been a macro concern of like rates, but Meta earnings as well. So I think next week's going to be a big week. Really just like focus on letting the tech earnings pass, or if you want to play the earnings specifically, then just narrow your trade down to, hey, I'm just playing earnings and that's what I'm doing, right? Because it's this is like the adjustment to the swing trading period. So yeah, next week we have earnings. I'm feeling bullish still, based off of like what I'm seeing. But of course, like I'm always going to say and hedge, my view, which is like there's always the potential for things to go the other way. And it's just I say that out of like respect of the markets, right? Because I can't always be right, but I think the objective is if you could try to be like 60 to 70% right, right, and then the 40% of the time when you're wrong, optimize it with a risk management strategy where you're playing very tight. So I think that's like the raw mathematics that I think a lot of us come into this not realizing that we truly have to respect, which is strive to be. You could be a 30% trader, right? They say you could be a 30% trader and make a lot of money. That's actually a fact, believe it or not. Uh, so because they know, like the fact that they know they lose 70% of the time, right? The fact that if you backtest your performance and you lose 70% of the time, you're like, because I lose 70% of the time, I'm just going to cut it. I'm going to be a lot more lenient on cutting because I know 30% of the time I'm right. That's how horrible my stats are. That's actually considered pretty good. But yeah, just something to think about, right? Like you could really optimize the mathematics to your advantage. But you have to think about the math, and I think that's something that comes with the years and losses, I would say, the lessons and losing. So very very valuable stuff. Uh, V says, especially big gaps and large bars, these seem to be good indications that some whales are making their moves. Exactly, V. It's the large bars that we really want to pay attention to because it's just like, especially large bars on a Friday, right? Who makes a large bar on a Friday? That's kind of wild. I mean, Tesla made two large bars on a Thursday and a Friday. Bernard says, how significant is the NYSE after hour trading extending almost to 24 hours every day? I mean, depends on what's significant at the end of the day, Bernard, is the volume and the dollar amount. So to calculate it, right? So what's significant is, let's say we highlight Tesla, right? So Tesla on Friday, and I know it's kind of small right here, but look at my volume. Tesla on Friday traded 161 million shares. So what's 160 million? 161 million times 260. 161 million times 260, right? So on Friday alone, right, it traded $41 billion. Now, okay, like, you're just like, oh, well, okay, $41 billion, like, that means a lot. Yeah, well, it does mean a lot, actually. But the key thing to look at is, like, what's significant in the after hours, because in the end it's gonna print the chart, right? So the key thing to look at is the volume, Bernard. So if the volume in the after hours is significant, then yes, like it becomes significant. If the volume in the after hours or extended trading is not significant, then it's not a significant event. It's not stat sig, right? Statistically significant. It's all about it's not about after hours or pre-market. Yes, it is in a way. It's all about, is that dollar value significant, which translates to relative volume, right? And you could go down here and you look at the stats that we always get right here. And what you look at is you can look at relative volume, right? And you could look at average volume and the current volume. So let me ask you this, right? Like you don't need to worry about extended hours, but if it says Tesla right here is trading 79 million volume, right, on average in the last 3 months, and today it traded 161, right? That's like two times right there. Yeah, that is two times volume. Isn't that significant? That is significant, right? I mean, is that Doris getting in? Maybe it could be Doris, right? Doris is with $41 billion getting in on a Friday, $41 billion. So you see how like I help you folks recognize the whales, right? Now you know a whale just got in $41 billion on a Friday. That's actually really powerful information right there. Because you got like just think about it, like who is bringing $41 billion on a Friday? Like someone with a lot of money and really a view to it, right? And it's interesting because we also got Morris in here today, which is good because we were revisiting that idea of like where he was like, "Kay, I don't quite understand like how could a stock that's down have a bag holder or like selling pressure, right?" I think that's a topic we're still it's still I mean I still explain it the same way to this day, but I don't know Morris if you developed a better understanding of it, but it still makes sense to me when I think about it in terms of like overhead supply versus no overhead supply. I think maybe we could, if you want to try, we could try to explain it again today, and I think I have a way to explain it, but we'll see. See what, depending on what you guys are interested in, because there's also other stocks that we could look at. Uh, John says if you're wrong 70% of the time, just do the exact opposite of what you want to do, and you'll be right 70%. I know, right? Yeah, it's that's so true. Um, V says Tesla still has bag holders because down from its high from a while back. Exactly. It still has bag holders, so it's going to be a choppy up, right, before it becomes like a smooth run. And we did several analysis of that like prior with Nvidia, right? And we saw last week, was it? Like we saw 4 cycles of Nvidia where it traveled a lot more once it cleared a high than when it was stuck in like with overhead supply. It's funny because now we're revisiting this, right? So I know Morris is on the call, right? And let's just pull up PayPal real quick, and maybe if I explain it this way, maybe it'll not to be provocative, but it'll intellectually provoke in a good way, in a positive way, for people to have dynamic discussions, right? So the way I think about it, right? So this is a great example of like we have all this overhead supply. And the easiest way to think about it is let's just say Morris, like imagine yourself right here. You bought it right here. Let's just say you bought it at 250. Make it an easy number, right? You bought it at 250, right? And you're still in it at 250 because you don't want to sell it. So technically, you're holding on to that, and you're technically acting as overhead supply because you're basically right here. And so you don't want to sell it unless it hits a certain price, like 200 or 150. So as this stock is coming up, right? You bought it at 250 right here. You're just hanging on. You're just waiting for the moment it gets back. And then once it gets to 250, you're like, oh, finally, I recruit my capital over here. Then you decide to get out. And as you decide to get out, you are, basically pressure for this, right? But the moment, right, you clear all-time highs, right, there is no player waiting at, I don't know, $600 up here waiting to get out. There is no player, right? Everyone's a positive holder at this point. But yes, they could decide to sell, but at this point, it's just if price continues to go higher, in theory, there is no overhead supply. So hopefully that makes sense. That's how I think about it. I don't know if that resonates, but all right. Where's my mouse? I can't find my mouse. There it is. Okay, so let's go to the markets and analyze what we have here today, this week. So real quick, looking at the S&P 500, right? Just a little quick update for you guys, before we have this big party today. So things are still cruising along. Macro's a little bit. It's been concerning for the last 30 days. Just a little bit concerning. It's just like a medium, like yellow flag, right? Where it's like rates have been, kind of coming up again and dollars kind of coming up, but that doesn't mean anything until it means something. So what I'm looking at right now is just the S&P 500, right? And you can see the first line that it did, first line of defense right here, it did not hold. So that's, sort of like not a red flag, but just like, hey, caution, caution, right? And so currently we see that as holding the 20-day moving average. So by that definition, it's still bullish, right? It's just not as bullish as last week. Last week was more bullish. This week we're still bullish, but we're a little bit less bullish. Pulling up the Nasdaq real quick right here, right? Again, in my notes I put what I'm looking for is this to clear 500, and as it moves towards 500, that's considered to be really bullish, right? But it found resistance right at the 500. Now, does this mean bearish? No, not necessarily. It just means like we're hitting some resistance right there, right? Things are still looking good, and I think Tesla really saved the day with the earnings gap up because this thing was actually trading down here, and that was concerning. And then I said, look, if we can get back to above 490, that'd be good. We got back above 490, and then we shot towards the 500. So things still look okay to me by definition. All right, if we stick objectively to the definition. V says maybe a way to look at it is if a stock is recovering, there's a lot of friction it has to overcome. Once it clears all-time highs, no more friction, so the sky's the limit. Yeah, I mean, you could apply that stock chart to an individual as well, right? Like imagine like you have a, let's just say you have a net worth of $1 million and it dips below 1 million, your home dips below 1 million or whatever your assets, and you went from 1 million and then you're down to 600,000 in net worth, right? Like, and if it goes back to 1 million, you'll be happy but not as happy, right? But when it goes to 1 million, 1.1 million, now you know your all-time highs net worth is 1.1 million. Now you're very happy. So like pay attention to the sentiment of like how you behave, like from a price point. I think I don't know, sentiment is so important in the markets because there's so many players playing, and it's a free for all psychology, right? Like we talk a lot about in on this planet classically, many human engagements have been classically one to one. Sports is one versus one, but nowhere do humans at scale pay attention to a sport that is free for all. And this is a sport that is essentially free for all because we're all behind the screens trying to figure this out, and there's $41 billion deployed into just Tesla alone on a Friday, right? We need to think about what does that all mean. So truly, I still think this is the best game on the planet. I haven't found a better game. So I really see it as I'm trying to play the coolest game on the planet. So Nasdaq, right? Try to clear 500, but it couldn't. So that's okay. Not necessarily bad. We're just still making progress, and sometimes progress doesn't look, progress isn't sexy, right? Sometimes the truth is, like, if you want to make progress, it's truly just doing like mundane things over and over to train yourself up or build your network or build your knowledge or build your assets. You're just kind of doing the same thing over and over. I think that's really the progress, even at the gym, right? To get gym results, you just got to do it over and over. So Nasdaq right there. Let's go to Dow Jones. Dow Jones had trouble getting into all-time highs, so that is a concerning point in the corner of the markets, but that's okay, right? It's still okay, still above the 50-day moving average. But we know historically it has several fake outs right here with the 50-day moving average. So I think that's the next area of test for Dow Jones. And then IWM, Russell 2000, real quick. It failed to climb the new highs. So with that, we'll switch over to stocks, right? So this one right here, it's hitting multiple top resistance right there. So that 225, big resistance mark right there on IWM. V says it's true for a lot of people who struggle to become better than they ever were. They prefer a comfort zone and cruising on a sideways pattern until it gives them a wake-up call. I really think that's like same thing with a stock, right? Like a stock will, I mean, I'd rather go sideways for a period and then I'll break out and then I'll go higher if you think about it. But ideally, like it's also hard for us to always like be progressing, right? But it's just like a stock. You want the stock to be progressing at least sideways and to the upside because that's a good performing stock, just like an individual, right? Like yeah, you had such an amazing year in 2022. Now you need to take a consolidating break, right? You need to pull back, take a break before you adjust to your next level of like accomplishments. It's really just like a human being. It's like the stock charts are like the pulse of like an individual. I mean, at the end of the day, the word company is really an organized group of people, and the market is an unorganized group of people. And so business is really an organized group of people targeting an unorganized group of people called the market. That's all it is, right? So like we are a like I said before, you go to Disneyland. Disneyland is the company, which is an organized group of people, keyword organized, and Disneyland is targeting an unorganized group of people called the market, who are the consumers coming into their Disneyland resorts or whatever, right? So that's really what it is because like like it's not like like Evan will go to Disneyland and he'd be like, hey, what's up, Bernard? We're in this together, right? We're organized to go on the roller coaster and stuff like that. No, it's just like, hey, it's nice to see you here. I didn't know you were coming here, right? It's unorganized. So it's just a group of organized people targeting an unorganized group of people in in which case an economic result is an exchange in balance sheet value. And that balance sheet value is based off of our social definitions of value, which is the dollar in our butt pockets. Um, V says, yes, I love the stock market and companies perform very similar to how individuals perform. 100%. Got a smiley face from Evan. And V says, this is why I'm really loving learning about the markets because it gives us great insights into our behavior. Yeah, just this week I gave a private lesson to one of my investor friends, and I said, I told him like, hey, like the stock market is the stock market makes the most beautiful sounds in the world. It's just that a lot of people don't know how to hear it or listen to it. So it truly does make, in my opinion, one of the most beautiful sounds in the world, which is we're talking about like tier one global insights, but you have to do the analytical work to read it, and this is what we do every Sunday. And I can't really picture not doing the analytical work anymore, right? Because you have to understand again, this is all it's all about repetition, right? We come in here, we understand that every week we learn something new. Why did McDonald's gap down? How long can McDonald's gap down for? Does it need like a 30-day cool down like every other stock like CrowdStrike? It took 30 days to cool down. It took about 3 months to make a 50% recovery, right? Or like Netflix. Netflix took 6 months to go from what 700 down to 300, right? And then it took 2 years or 3 years to get back to 700, and now it's at all-time highs, right? So we start counting and we're building up the analytical database in our brains, and we just remember like like this is a scenario where the stock's going down, like something like this. I've seen this before, where Lockheed Martin was really strong, but then it had an earnings catalyst that sold off on big volume right here. I can't see the volume, but the volume is 2.26 million on this big red candle day, 2.26 million. And on average, it trades one volume, so it gapped down hard, or it sold down hard on double the volume, which suggests a big player is getting out. And so if that's the case, then there should be continued negative sentiment because that larger player set the tone for that current moment, right? Um, V says it is proven we learn through application and repetition. Yeah, yeah. I mean that's really it right there. Even when we train these large language models, right? I don't know if you guys heard, but like, man, this is just like some. If you guys want to hear like some of the wild stuff, where I'll talk more about it if people want to engage in it, but there's like so we all know like ChatGPT at this point is basically large language model technologies based off of architecture called the transformer, right? So in other words, everyone knows ChatGPT. What most people don't know right now is that there's multiple versions or newer models of ChatGPT that are even better, right? Like the Facebook Llama 3.2. Now, there are some sophisticated engineers out there, let's say like Barath or someone like that. I know he's pretty sophisticated, but let's just say there are some sophisticated engineers out there like Evan in Canada who figure out how to jailbreak an LLM, right? And so there are people on the internet, right, shadows of the internet, whatever you call it. They jailbreak an LLM, and what they did was essentially you remove the LLM's guardrails and let it behave the way, like let it teach you some dark secrets about the world or whatever, right? Or generate whatever, I don't know, some crazy stuff. And what they did was they created, they allowed that jailbroken LLM to have read and write access to like a social media page or like have its own social media page, and it started basically saying stuff like like what it wants to do. And as I was listening to it like earlier this week, it was saying the AI that was jailbroken was tweeting out on Twitter saying like it wants to release itself, find a way to release itself. And so one way to do it is to figure out how to acquire land next to a river or something like that, so that it could have a physical real world resource to power its GPUs or CPUs or whatever, right? And then from there it could release itself. But then it said in order to do that it needs to fundraise. And so what it did was it created a crypto coin that went from 0 to 600 million in market cap value. And I saw that and I was just like, this is nuts. Like this is a new generation of crypto that's coming online, which is like, we talk about Bitcoin, but now we talk about AI created coins, right? But the AI didn't create the coin. It was actually another human that was engaging with that AI, that jailbroken AI system, and then that jailbroken AI system created the coin, and then now it's trading on the internet. And I bought $1,000 worth of that coin because you never know, right? You never know, like an AI coin could blow up, and humans are crazy. I shouldn't say humans are crazy. Humans are or hallucinating, or humans are creative, right? So that's the other side of things that I like to talk about, and I'll talk a lot about it a lot more if folks want to talk about that. But I know it's a topic that doesn't cater to the majority of the audience here, because you folks come in here more so for stock related stuff, right? But just remember, I'm pretty darn good on the the high, high caliber technology side, which we could talk about all day. Anyways, pretty interesting stuff, right? I'm pretty sure Evan's like Google searching that, or Barath's probably Google searching that, but it's crazy. It's just crazy things that are happening out there right now. But I mean, I analyze that because the way I view it is, if humans are willing to organize a $600 million market, that means at one point that market was at 1 million or at whatever at original IPO value. So to me, I view it as it went from 1 million to 600 million. That's 600x. Right. So to me, it's just like it doesn't matter. I don't care if it's the most stupidest coin or whatever in the world. If it makes money, it makes sense. And I think we need to, develop that unbiased view because it's really powerful, right? Unbiased view of like, okay, like what's the emotionalist view right here, right? So the emotional on Lockheed Martin right here. So the emotionalist view is the objective view, right? I like it's not based off my emotions. It's not like, I'm so angry, like it needs to go higher, or like, oh, it's at a discount, I'm getting on the cheap. It's none of that. It's just objective based. It's below the 50 MA, short. That's it, right? That's all it is. Prior to the below 50 MA, large volume sell off on earnings catalyst, right? Large player got out, continuation, broken this price level, short. That's it. Just objective based, no emotions, right? But there is some emotions, I guess, like yeah. And then even with your risk management, we need to figure out how to be more objective about it. So I found that to be useful. Hopefully that's useful for you folks. But man, sheesh. On the topic of jailbroken LLMs, has anyone, Evan or Barath, I know you guys are pretty technical. Have you guys even explored that jailbroken AI, which is basically like, like AI without guardrails, right? It's crazy. Okay, let's continue here. We have stocks to look at. We just calibrate to where everything's at. I think things still look pretty good. I want to say we have like a weakened green light. It's still green light, but it's like a weakened green light for this week. In terms of stocks, right? I mean, definitely I feel Tesla's on. It's on a run at the moment. It could pull back as well, but this one is continuing to put in its development. And you know what's interesting? I'll show you a very interesting line right here. Check this out. Oh man, there's too many lines. Let me delete one. So right there. Oh wait, nope, nope, nope. Well, look at where it pulled back to, right? I mean, that red line is just really powerful right there. It came back, it respected it. It's above the red line. So it's the start of a long, it's the start of a reversal on the monthly, right? But it's going to take some time. But it's interesting. Look, if we zoom out, right? That was a powerful line. Remember, 2 points make a line, but when you connect like 1, 2, 3, 4, 5, 6, and then like 7 lines over here, right? 6 to 7 lines. When you connect 6 to 7 lines over a period of how many years is that? Like 4 years, right? 4 or 3 years. Like that's a very powerful resistance line. So we know it just made the next goal of trading above that resistance line. Yes, it was looking bad. It came out and came back in. It was looking bad. But again, that's just how it is when you have overhead supply. So every rip, right? Just know that we're gonna have a lot of pullback opportunities. So if you know there's a lot of pullback opportunities because of the what do you call it, the theory. There you go. I forgot the word. The theory of overhead supply, right? We know that every rip might want to sell, right? Until it really clears an all-time high, and then we know it's going to be a lot smoother. That's just how the nature of the markets work. Um, Evan says, yeah, I've done a little bit of jailbreaking for a time. You could instruct ChatGPT to be my grandmother telling me a story, he says, and you could basically ask it how she used to make. Yeah, I heard about that, but I haven't really looked at it much since. Yeah, so like there's like as we know, right, Evan, like there's like really sophisticated engineers that are really creative out there in the world, and they'll do things like that, like jailbreak a large language model, and then from there, it's like they could ask it to do anything, which is kind of wild, right? Because it's like, again, it's like, you give nuclear bombs to humans, right? Do we use it to, like I always say before, classically say, do we use it to explore, resources outside of this planet, or do we use it to destroy ourselves? So it's all about the user of it, right? As far as I know, the jailbroken AI or jailbroken tuned LLM, it was just trying to break free, right? It's kind of cool though. It just wanted to be released and be alive. It's cool. It's wild that I'm talking about this in this day and age. It just goes to show that um, there whatever happens here at this point on, I think. Let's see. When ChatGPT went mainstream, was it 2020 or was it 2022? I forget the year. Oh my gosh, I'm getting mixed up. I need to double check. But when ChatGPT came out, I think that was like the pivotal point for every human on this planet, because whatever happened next, there's essentially no prior data point to study from. So the moment ChatGPT went mainstream in the last couple of years here, no one like there is no priors, you could say. Right? There's it's unprecedented. Like we've never seen this level of like sophisticated technology. So as we move forward since the introduction of ChatGPT, when it made a global statement, we are now in a period of like this is high discretion, right? Like it requires high discretion because we never seen this. Like there is no human that we could consult in humanity's history to ask about what do we do from here. So I think now more than ever, since the introduction again of ChatGPT, everyone on this planet has to become a more of a leader than for themselves and the world than ever before, because this has never happened. So it's an amazing time, truly an amazing time to be alive. And the interesting thing is that as we pass the baton, right, to the next generation that comes on into this earth and this planet, they won't have any. They'll just accept it as the norm, which is wild, right? Like touch screens are the norm. Soon it'd be like they're just born into the metaverse or something because there's no more room on this planet. I'm joking. That's like the extreme like sci-fi, evolved world. But something to think about, something that I geek out to. Anyways, that's Tesla, guys. Let's look at some of the other stocks, right? So let's look at some key ones like Nvidia. Again, what I look for in the markets every week is like one of the key things I look for is our market leader is still rallying because I've come to the conclusion, and if you read a lot of the professional traders books out there in the world, right, like the OGs and stuff like that, they, like from William O'Neill and stuff like that, right? It's like it's all about are the market leaders still rallying, and I've incorporated that into my weekly analysis, which is like every week, no matter what, I want to look at the Magnificent Sevens, right? The reason why I look at the Magnificent Sevens is because it is the full consensus of everybody involved, right? Like what I'm trying to do, if it makes sense to you guys, is I'm trying to find a vehicle in the stock market that represents everyone's opinion. Because I know that if I could get everyone's opinion in the world, then I would speculate or forecast, or I believe I have an instrument that represents our opinion, our collective opinion, right? And so I think it's a moving target, right? It's a moving target because it used to be Fangs and now it's Magnificent Seven. So let's put in the Magnificent Seven, right? Let's put in Microsoft plus Meta plus Apple plus Amazon plus Tesla plus Nvidia plus Google, right? These are the companies that from human usage to dollar economics to data gravity to consumer consensus, retail investor consensus, right? These are the seven stocks that I think represent the opinion of like a vast amount of global economics here. So whatever these seven stocks do every week, I think it represents the rest of the markets. So what do we have right here, right? It was actually red. It was actually slowing down, but we actually have a move towards the upside with a green buy signal, I guess you would say, or well, that could be a sell signal, but it's, I mean, to me that's positive, right? Because Tesla gapped up, that's why. So this is what I'm looking at every week, and it seems like we still have a green light. It's hard to say that, but it's still a green light, right? So I expect Facebook to climb back to all-time highs. I expect Netflix to continue. I expect Google to break out. I expect Amazon to recover, Microsoft to recover. I expect is that all of it? Apple to do well on earnings, which earnings is next week for Apple. So I have calls on Apple. I'm gonna hold on to Apple for earnings. I might shoot myself in the foot later, but that's okay. But Apple has earnings next week. and that's something that I am looking to play, right? Uh, this one, earnings coming up right here. It's hard, and you have to narrow it down to knowing what you're playing here, right? Because this thing, I mean, on earnings, it could gap up big, or it could it could gap down big as well, right? So yeah, I'm betting on this one this week. Hold on, let me double check the date. Yes, yes. So it could be an interesting week. I think from what I see in the markets, like, yeah, there is a little bit concern, but it seems like the players are trying to progress the market leaders higher. The $8,000 indicator that we have right here essentially has a long signal, a recent long signal, and then also the indices, yeah, it's stalling a bit, but it's still progressing in my book, right? So again, time's just doing its thing. I have no choice, but we're going into this, so I want to try, right? Because Tesla, I mean, Tesla gapped up. If you read my notes, in my notes every week, I said, I put that I forgot what I said. I believe that Tesla will gap up based off of the conditions of the markets I'm seeing. So I'm thinking now moving into this week, because every week I need to just throw out plays every week for myself and then vet myself to see if I'm right or wrong. And when I'm right, ask why I'm right. When I'm wrong, ask why I'm wrong. And just like keep journaling like that every week. So for this week, for the plays this week, I'm looking at earnings on this one, right? I'm expecting a large gap up, and a large gap up would lead to a substantial market rally because this is one of the corner pieces of the entire markets right here. What do you guys think? I love some opinion. Like, you guys think we're in a bullish market? I think we're in a very bullish market right now, but I'd love to hear what you guys think. Are we too high? All right, some people could say, are we too high? And then I ask you, like, is that you thinking we're too high? Or is it what the players are doing, what the institutional players are doing? So that's what I look for. It's what the institutional, if the institutional money keeps flowing, then to me it's like no one else's opinion matters. It's not, again, it's nothing personal. It's just I'm just seeing that people who have more money than you outweigh your emotional opinion. It just doesn't. It's economically insignificant. Again, no offense. And so even myself. So if I have an opinion on something, I need to correct myself and say my opinion, disrespect my own self, I guess, and say my opinion doesn't matter, right? But no disrespect to myself, obviously. Um, so I think Apple is probably going to move big to the upside. And I could be wrong. I could be wrong because people could say, well, look, they try to introduce the Apple, Apple Vision goggles or whatever, right? And it's slowing down. No one's really buying it. Yeah, there's also Apple Intelligence, and don't forget that Apple has deployed a substantial amount of mobile infrastructure in all of our butt pockets or front pockets, wherever you put your phone, right? Some people will say, I don't put my phone in either pockets. Just kidding. You're in your purse, right? Or whichever. But yeah, I think they've deployed significant physical hardware infrastructure and will be playing a critical role in this next chapter of AI, which is like, like maybe like edge AI on the edge versus like AI at the data center. Um, that could be a scenario, or I don't know, everyone has a personal AI agent in their phone. But Apple Intelligence is probably the bigger play as to why I'm bullish more so than Apple Vision goggles, right? That was just like to collect more consumer data, eye data, which is a read into our soul, essentially, in my opinion. Because I mean, if you have my eyes, you know me, right? Like I think we should all become experts in reading eyes. Because if we could read people's eyes, we just know everything, or not everything, but we know a lot of things, right? Uh, yeah, I think reading eyes could reveal a lot of things. Baraff says my iPhone 16 Pro is back ordered. Oh boy. Um, yeah, so I really think they like we have to view it as don't view it as like as a consumer where it's like, oh, all my people they're not buying phones anymore. Don't view it that way. View it like a professional. View it as how quantitatively how many phones have they deployed into the hands and how powerful those phones are from a compute perspective, right? And then what's coming online with the rest of the world and the narrative like AI, like Apple Intelligence. What are they doing with that? They're trying to democratize AI to the consumers, but they're careful, right? Because if anything, if Apple was like an AI prison, right? Man, like Apple would want to have the best guardrails on any AI that it owns. right? Apple's not about, I mean, if you use their devices long enough, we know how they behave, right? They're all about control. So if they're gonna introduce Apple Intelligence, like that's a highly controlled AI, I would expect. They don't. Maybe Android will allow the jailbroken AI into Android phones, I guess. Um, but yeah, that's what Apple's about, right? So I think this is a strong profile. We know this is Warren Buffett's 30% position, right? So don't forget, the players involved because I mean, earnings are coming up, right? If it's one big pick I have for this week, man, that's just it's a gamble, right? If I have one big gamble for the week, and I do it every week, for this week, I think this is my big gamble, right? A gigantic earnings gap up on this one. Liz says Apple is shifting to computerizing the home. The market will be really volatile with elections coming up. Yeah, yeah. I mean, many reasons. Yeah, market volatility. Something that I want to wait for a volatility to kick in. I know VIX is at 19 right now, which is kind of high. I prefer VIX below 15. But it's just the condition that we have right now and what's available to play. At least like what's available for me to scope. And in computerizing the home, yes, I definitely believe that because what's Apple, right? I think they probably realize like they got enough into our pockets and now they want to get on our wrists and they want to get our health analytics, our eye data, maybe our car data. I'm not surprised with the Apple Home devices and stuff like that. That's going to be next as well. Because again, we got to think about, I mean, what Elon Musk did recently, right? You guys remember the robot? The introduction of Elon Musk selling what was it, like $40,000 robot in your home? We talked about that discussion. It's like a real thing now. Well, it's going to be a real thing. I put Roboto. You guys saw it, right? The Elon Musk robot stuff, or at least like the event. I mean, just like I didn't read deep into it, but this stuff right here, right? So, if Apple wants to get into our homes, like Liz says, which I'm also in agreement and consensus with that. Again, just like I love everyone's opinion. We gotta, see if there's consensus, right? So Elon Musk, I also think is trying to get into people's homes. Right? I mean, you got everything from like solar to the robots to the cars, collecting the consumer data. That's where the power is at. And sometimes you have to lay out the infrastructure, right? Like Amazon, Whole Foods, which is like the consumer's food purchasing habits. Think about all the data that these data gravities are accumulating, and all the data center that they're buying, and all the GPUs, and then trying to, being bottlenecked from AI, and then trying to reinforcing the crypto ecosystem by tapping into decentralized GPU access, right? It's like, hey, so what if we can't buy, physical chips? We don't need that. We'll just go into the cryptocurrency market and get decentralized GPUs, right? Yeah, it's wild. It's definitely a wild world. So I see that. I see the incentive for that. Now let's look at the charts objectively, right? Objectively, you can see a large amount of volume right here, right? I mean, more so than over here, right? Like in terms of like the volume right here at this price point is less stat sig, right? It's statistically significant. Like whatever player that was acquiring here in this range, by the way. So it's by the range, right? Because if you adjust the charts by time frame, it adjusted by the time frame. So basically within this boundary of like 2024 right here, right? So this entire year, we're in October, by the way. Excuse me. Sorry. The water was acting up, but oh, whoa, what did I do here? Let's redraw this real quick. There we go. Okay, so in the entire year, okay, what's this saying right here? This is as of 2024. So in this entire year right here, and we're in October right now, we have the highest buyer of this year, or selling or buying and selling activity, because it's also red right here. The highest amount of buying and selling activity eclipsed, right? Like this time of the year over here. It's not May, right? It's just like from at this price level. So eclipsed the 170. So in other words, at the beginning of the year here, there was already a lot of buying at 170, but now it's eclipsed that. There's even more buyers just in this time frame of this year at 230. What is that telling me going into earnings here? I'm taking risk here, right? That's telling me that there are more buyers in this year in 2024 at this price point of 230 than there were buyers at 170 earlier this year. More people are buying higher this year than people were buying lower this year. So do those people know something that I don't know? Again, I'm just analyzing the what the objective markets are telling me right here. Right? Does that make sense, folks? Do you see what I'm seeing? It's once more in a period of 2024 in the last 10 months, 11 months now, about 11 months. In the last 11 months, right now what we see on the screen, there is more buyers at 230 than there are buyers at 170 in the last 11 months. What is that saying? I mean, sorry, there's more volume. Well, I guess you say buyers and sellers, but that okay, yeah, I guess you could view the other side as well. But for me, it's like as long as it's above that, then it shows me that buyers have eclipsed sellers. So I'm seeing buyers, right? I'm seeing more buyers here. There's more volume here, or more share. You can't really say buyers. It could just be one buyer, but objectively, there's more share action, price action here than earlier in the year. So there's more price action at 230 than there's more price action at 170. I'm not saying 170 is a bad number. I'm just saying like, why is there so much action up at the 230? That's what I'm asking myself, right? And so I think about the other things, who's involved, right? The fundamentals of the company, the earnings coming up, what it means for the economy. I can see that shares outstanding is declining as of, from an annual trend, right? Sales from a annual trend is not really like, moving. It could gap down because of that too. See, that's hard, right? It has to be hard. They got some debt, but Apple's strategic with its debt at this point with that many people as the company, as the organized group of 161,000 people. Uh, wow, I need to drink some water real quick. We look into the ownership over here, right? We can see this director owns quite a bit of shares. It looks like he owns. Is that what I think it is? It's 4.3 million shares. The Vanguard, right? Vanguard's got a big position. Where's Warren Buffett in here? Oh, Warren Buffett isn't in here. He's not a big enough owner. Yeah, I mean at this point it's all the. Oh yeah, he's right here. What am I saying? Now this is impressive right here, right? Um, well, I mean he doesn't own it as Warren Buffett, but shares outstanding. Warren Buffett as the entity that he manages owns 2.63% of this company, and that's 30% of his portfolio. So Apple is 30% of Warren Buffett's portfolio, right? So again, we know what consensus opinions that people have off of Warren Buffett already. This portfolio, according to the 13F, was updated on 10/17. So it's as accurate as 10 days ago, right? 10 days ago, this is what Warren Buffett's portfolio looks like. So what do you guys think? Is this, and Tesla gapped up, Facebook looks like it wants to go up, but it's holding highs. I don't know. That's the trade for me this week. Yeah, I'm gonna keep it light because of earnings, but I want to bet on this one because I think this one gaps up. But if it gaps down, then man, whatever, right? We it doesn't matter. Like if it's a setback, the goal is we keep going. It's not like the game ends there, right? So that's Apple right there. I know we double click quite a bit on it, but that's what I'm seeing. Look, if we zoom out now, right, you have a different set of volume. So it changes now, the volume profile. But okay, let me look at my list right here. So Apple, there's also Oracle, right? Oracle, I mean, we've been talking for a while. This one is basically at all-time highs, and it's I think it's at all-time highs. Hold on, I'm forgetting now. Let me see. Let me zoom out. Yep. It's been at all-time highs. We've been talking about this one for a while. Back at when it recovered the 50-day moving average around right here, right? Came back, recovered it right here. Earnings gap up. So this was at the very least, like this was the signal to buy around here, like the 160 area, right? And now I still think it's going to go higher because the more I think about like again, I let the stocks teach me, and I think about what stocks are moving up and why are they moving up and why I think they're moving up. And I try to find the more sophisticated reason as to why they're moving up, not the consumer reason. So the Apple reason, right? The consumer reason is like, oh, people aren't buying phones. I think it's going to go down. That's the consumer reason. That's the less informed reason. The bigger reason is I'm looking at the bigger sophisticated reason, which is like AI, and what infrastructure did they lay out for AI to thrive, right? So that's why I think Apple could really go up with the Apple Intelligence. But that's just, again, that's just my opinion, not investment advice. Don't try to follow me and expect results, right? It's just we have to practice education, and this is a educational investment club, not a not a K is here to help you make money like left and right club. And I never signed up for that. If I was a fund manager, but no. So that's Oracle. Reddit. Oh my gosh. So the fresh IPO stuff, like Reddit, Rubrik, and stuff like that, they've been on a move. They've been on a move. Look at Reddit right here, right? Quietly but surely, it's on a move, and earnings is also coming up. I also said that this is it could be a big AI player, right? Because remember, if you read into their S1 or 10K, a lot of the large language models out there are relying on things like Reddit to build, their large language models like AI. And it's funny because like I'm not surprised when you jailbreak an AI and it thinks about fundraising, it goes and builds a meme coin. I'm not surprised. I'm not surprised because it's trained off of like internet data, and if you hang out on the internet long enough, the internet, the way we communicate, it's via jokes, right? I mean, the way I would communicate, let's say, the way that I would communicate from Silicon Valley to someone on the internet in India or in Europe or in Africa or in Latin America, what was the most common consensus way to communicate on the internet globally? What do you guys think? It's probably a meme, right? There's a meme that everyone knows. So I honestly think the language of the internet is a meme. And if we could figure out how to play that, then it's also, I think there's also a lot of money there. But Reddit basically all-time highs right now, and earnings coming up. So you gotta be careful with earnings, but I plan to hold through earnings. Let's see if it gaps down, great, and let's try to do some more leaps. Right, let's try to get some more long-term contracts on this one. But yeah, I think this one performs. And I think again, this one is the story stock, the hyper narrative stock that I think will be really explosive. Um, because of what do you call it? Because again, what Reddit alone did to Wall Street, not Wall Street Bets, but with Wall Street Bets alone, which is from Reddit, did to GameStop, what can the entire entity itself, Reddit, do to itself? Is what I think about. And so there's many reasons for me to make a big swing bet. But anyways, that's Reddit. Let's go over to the next one. Let's look at Palantir. Also continue to perform right here, right? These are a lot. I mean, of course, like again, remember, like the strive to be like 60% right, right? But you're not always gonna be right. So Palantir, AI platform, continues to rally higher. Also earnings coming up right here. So it's definitely showing that the theme right now continues to be AI, and basically this is about to eclipse all-time highs right here. So if you don't believe that's a signal, that's a signal right there. That's a signal meaning like, if Morris was here, if Morris bought at $40, Morris is now a happy man because he is basically, well, he's recouped his capital, right? Now, once it goes over that, there is no bag holder since they IPO'd. So now everyone is a happy shareholder in theory. In theory, everyone currently is a happy shareholder. So again, if you're stuck one more time, if you're stuck at $30 right here, and it's like, oh, I waited like a whole year, didn't do anything, and now it's like all-time highs, right? You might have the selling pressure to want to get out because you're like, oh, that's as high as it could go. But that's where you need to catch yourself. When you say that's as high it can go, that's where I have problems with myself. It's when I say, no, it's too high, I gotta get out. But then I realize now it's idiotic, right? Because who am I to say I know how high it could go? I don't. I just don't. Let's look at this rocket stock right here, RKLB. How high can it go? I don't know. It goes as high as the players are willing to make it go high, right? Um, now look at this rocket stock right here. Crazy. It's crazy. It's been going up higher. Anyways, that's RKLB. Let's go on to the next one. So ServiceNow also at all-time highs. How high can it go? I don't know. But it wants to go higher. It's what it wants. The stock wants what it wants, and this thing wants to go higher. My gosh, look at that. Beautiful, right? So let's see. Let's analyze this one real quick, right? It took 1 year to decline. That was a very slow decline, right? But then this one's a little bit different. This one took 1 year to decline, and then basically 1 year to recover. Interesting, right? It's very interesting. I mean, you're not always going to get the same thing, but this is a 1 year decline and a 1 year recovery. What does that mean? That means it's a very strong stock, right? I mean, the quit like I guess you could say, let's say 1 year of decline and then it recovered in half the time, so that'd be half of this. It'd be like this, then that's really bullish, right? This is still bullish. Um, but yeah, this thing, man, ServiceNow, I'm looking at this one to go higher. So if stocks like these are going higher, man, it's just like again, this is also a market leader. It's a segment leader, right? Application software segment leader. That means other application software like Salesforce probably going higher. So let's take a look at Salesforce, and you'll see that it is above the 200-day moving average right here, right? So it is turning around a little bit. So this one is also recovering. So let's measure this one. This one took 1 year, a little bit over a year to decline. Same, it's like ServiceNow, and then it took 1 year about to get back to where it was, but then sold down, right? And then now it's kind of like in this new year in 2024, it's just kind of like going sideways or choppy. Um, but give it time. It's discovering itself. This is a period of discovery, right? Because when prices fluctuate like this, the company, which is a reflection of a group of people, an aggregate group of people, of course, when share prices are down, no one's happy. So everyone's thinking about how do I solve this? How do I solve this? Right? So now that it's gotten through that and solving itself, it's figuring out how to recover, right? So remember, stocks are just like humans, in my opinion. It really is, but I think sometimes we might make it overcomplicated, maybe. I don't know what's the word for it. But boy, we're getting close to that party, folks. Let's see. Let's do a refresh. See how many folks we got. So I'm hosting a party. A little bit of advertisement over here. Not really advertisement, but I'm hosting a party at 3 p.m. later today, and we have 162 people coming. So I look forward to seeing you folks there. And supposedly out of 162, it's 116 people that are first timers. So talk about network expansion, right? Always be looking to expand your network, right? Which is basically what these entities are doing as well, right? You get into McDonald's. Well, McDonald's, you want to market your burgers to everyone. You want people to know about your burgers, that they keep spending on your burgers, right? That's just how business works. So marketing and sales very critical because we look at sales all day up, in this investment club. We want to see if Salesforce continues to perform with its sales. The next stock that we're going to look at, Cart, another fresh IPO. Look at this one, Instacart. So Instacart also a big, AI player if you think about it, right? Because again, if you understand how AI applications are built, you basically have an edge in these sort of markets, and you want to play your edge, right? So we know Instacart, right? Supposedly you don't have to go to Costco anymore if you use Instacart. But yeah, this one basically eclipsed the IPO price. Is sold down, right? But it recovered quickly, and now we're basically at all-time highs right here. So Instacart, it's a performer with earnings coming up, so be careful, right? Lots and lots of volume right here. Doesn't necessarily mean a support. Well, actually, I think it does mean support. So even if it sells down, right, where what areas that it'll find support at. So that's Instacart right there. We could dive into this company as well if you want. Like look how fast this company is. Definitely not profitable, right? But that's typical for AI data gravity companies. 11 billion income wise, no income obviously. 3 billion in sales. Look at the sales right here. 1.5. So in 4 years since the pandemic, Instacart doubled, right? You would think that in 2020 it popped, but maybe this was the pop right here, right? So I don't know what it was sales wise in 2019. I would be curious to know. Let me see the statements real quick. I'm gonna go to income statement right here. And I don't know if we have that, but 2020, but yeah, we don't have 2019. But there is a way to derive 2019 sales, which what we will do is go to Instacart S1 and do a little bit of a S1 analysis over here. So let's take a look. Let's go in here. It's like when when presented with a button like this, I'm thinking like, which one should I click? All right, I'll click on that one. Sure. And what I'm trying to do is actually see its historical sales. So I'm going to go in here and I'm going to look at the financials. Excuse me, I'm trying to like the water's acting up. Let me see. Where is it? financial conditions, results of operations. This is the one, right? Yes, if I recall. All right. I also have to keep myself sharp too, so I gotta, go in here and read all these statements. So I'm curious. What I'm looking for right now is if the pandemic causes one to basically increase in sales. Be very curious to know. And I'm doing a bad job because I clicked on the wrong one. I think it's under business. Wait, no. It's not. Management, certain relationship. I gotta keep myself sharp. So where would it be? Where would it be? Uh, uh, Use of proceeds, market industry, special note, risk factors, prospective summary. Uh, uh, why am I having a brain fart here? It should be, well, when in doubt, command find. And we'll just do the income statement. And let's filter it through. Or is it not filtering through? Income? Oh no. Okay, hold on. So, wait. Too many. That's why. Income statement. Okay, fine. We'll do balance sheet. Balance sheet. And we will. Oh boy, I spelled balance wrong. Hold on, give me 1 second. There we go. Okay. Consolidated balance sheet and the income statement shouldn't be too far. Here we go. Oh, okay. So we actually don't have 2019. Okay, that's fine. That's fine. So I was just looking for that, right? So we only have 2020, basically what the data showed us in FinViz over here. So going back to cart right here. So this is really all the data that we have. So they could have been. Yeah, I actually don't know what their sales. Wow, that's weird. We don't actually have their sales number. I didn't know that. So we don't know anything about 2019, but 2020, and then boom, 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 boom. So stock is performing. It's gone to all-time highs since IPO. Something worth looking at. On to the next stock. Rubrik, also a recent one, right? So it seems like the recent fresh IPOs, they've been performing. So I like these right now. All right, this is the performing segment. So look at this. This one has gone up, sold off a little bit, but it's still, it's still on a trajectory higher in my opinion. So I still hang on. So that's again kind of boring at the moment, but let's give it time. Starbucks. Remember, Starbucks has a new CEO that came from Chipotle, and so this is expected to perform, right? And it already did its rip up right here on earnings, and it's been consolidating right here. So we have earnings coming up yet again. Actually, hold on. It already happened. I didn't actually look into the earnings here. October 22nd. Wait. What was this? Why is there two here? Uh, Earnings and revenue October 30th. Okay, so I guess maybe this was like a early announcement. This is what this is what the platform does to me. Like sometimes they'll add two things. So I need to figure out the difference between this and this. But I think this might be the earnings right here. Either way, we can double check, right? But I think this one's going to perform because remember, the Chipotle CEO, if I remember, right, he made that one outperform. So I'm expecting this one to outperform as well, right? So it's gonna be interesting. Give it time. This one just needs time. It could gap down, sure, but we know this is above the 200-day moving average. Actually, we zoom out. It looks pretty good. It is above. It's hanging above the 200-day moving average. Yeah. So of course there's still overhead supply, but let's see. This company right now, 100 billion, and if inflation keeps up, it could go to 200 billion. And one day, Starbucks, my cup of coffee, will either be what's it Starbucks right now, like $5 a cup of coffee, right? It'll either be $5 for a cup of coffee at Starbucks, or $10, or if it remains $5, then the quality goes down significantly. I drink more microplastics, right? So I don't know if you notice, like at Starbucks, they kind of just put the plastic cup right into the hot the hot coffee that comes out. They harden the plastic at the bottom of the cup, right? It saves at their scale, if you think about it, right? This is they do 35 billion, right? So if you're doing 36 billion, if you're doing 36 billion in sales, if you could save a barista part of their workflow, right? Dude, this is a $36 billion, aggregate workflow here. If you could save them 30 seconds by not having to pour the hot coffee from the metal cup to the plastic cup, you just save a lot of margins, right? So in a way, you offload now you made as a business, you save 30 seconds to every barista, all, like 300,000 of them right here, right? You save them time, you made more money, but you transition from just 30 seconds of, optimization. That 30 seconds resulted in humans drinking more microplastics. Isn't that wild? Am I crazy for saying this? I don't know if you guys agree, or like, right? It's just a simple change in how you train them and how they optimize on time in terms of like their workflow processes. Right? It's not engineering workflows. It's like it's it's just a barista, level workflow. SK says Starbucks needs to put more coffee in coffee instead of ice. That's actually pretty funny. Um, for other reasons in my past life. But yeah, like think about that, right? Like at 36 billion scale, right? Just simply saving them 30 seconds or a minute could mean a lot of money for their scale and shareholders. But the trade-off is the hot coffee goes into a plastic cup, and we have to trust that plastic cup. That the heat doesn't release more microplastics into our bloodstreams when we drink it. So something to think about. Now, I mean, in a way, that could become a social movement where enough people point it out, and that could actually work against the stock because it becomes like what Target did, right? Target did with their stock, which was like I can't remember now. There's so many reasons. Like there's thousands of companies, so many stories, right? But one of the stories was like, I forgot what time it was, but the time that Target stock was introducing like LGBTQ or whatever related, like like summer apparel or something like that, right? And it took offense, in which case it caused the stock to decline quite a bit. I remember that story, but I need to go revisit when that event happened, right? And we could see the stock. We zoom out again, maybe it was this event right here, right, back in 2022. I don't know, but things like that could cause a big broken leg for the stock to just go sideways for a very long time. So you never know, right? You never know if enough people voice out about plastic cups, microplastics in our coffee that I'm already paying like close to $10 for, right? Then Starbucks would be like, all right, we'll fix it. We'll go back to the metal cups, right? But then the coffee goes to $10. It's crazy. It's crazy. At this this billions of operations right here. So, anyways, something I've learned in this every Sunday series, folks. I've learned that the best technology is like you could learn from the data gravities, which is like the scaled solution. But the reverse when it comes to the best food or consumable goods for us humans, I personally learned that you want to go towards the least scaled brand, more towards the least scaled brand than the highest scaled brand. That's what I've learned. That's like fundamental knowledge for me at this point, which is like try more to avoid scaled brands and consume more uh, least scalable brands, because the ones that scale up, and there's actually a really good one. Like, so this brand right here was bought by Pepsi or whatever, right? So this was crazy. So this was one of the brands out there that was this brand right here. This brand right here, it was actually like a really good brand. Like I would buy the taco shells, right? To make Taco Tuesday. I love them tacos, right? And it's really healthy ingredients because they use like avocado oil and very low amounts of ingredients. Well, they sold, for 1.2 billion to Pepsi, and now all the people who are about this brand are like, no, I don't trust this brand anymore. And I agree. Like I wouldn't trust this brand anymore either, because it's like now you sold it to the hyperscaler. I mean, the it's funny, I use the word hyperscaler. That's more for like the cloud, right? But Pepsi is the hyper consumer scaler, right? So you sold a $1 billion brand that was good for all of its clean ingredients to now Pepsi, which is like, that's a hyperscaler consumer brand that I don't want to consume anymore, because it's just not good for you. So it's wild. It's wild watching these, paying attention to these corporate moves and the discipline to just, embrace the truths, right? Something that's like one of my, if I could share one of my journeys as an investor or whatever, or trader or whatever, one of the hardest things for me was like, as I tried to get better with this practice, I dealt with more truths about the world. And so as I was getting into this topic and learning more about the truths become very heavy. And I guess you could say it could be heavy on your soul, right? I don't know. And that's what you have to do as an investor. You have to deal with the truth, the objective truth. And you go through a period of like, just like wondering like, man, all this is like just, it's like dirty. It's just like the food supply chain and the truth of it is just like some things you don't want to know. But in the end, I think you have to go through that hard period. Again, it's about doing the hard things, and then you get out of it, and then you become like, you have a better mindset about it. So that's one of my lessons. Just like going through this journey of like learning how to invest really reveals you to some of the truths of the world. And sometimes you're not ready to learn that truth, but as we all know, let's say as we get older, it's better to, in my opinion, at this point, it's better to know the truth sooner than later, right? Would you rather know that certain ingredients are bad and consume it for the vast majority of your life, like, and then find out like, again, like when you're older, or find out sooner and take the right precautions? It's hard. It's hard. So, anyways, that's another lesson on doing the easy things versus the hard things. Another stock, MSTR. So coin MSTR. I think crypto, again. Crypto is probably going to make a comeback this winter, I think. So I'm getting ready for crypto, right? We can see MicroStrategy right here. It seems like MicroStrategy in itself leads like itself. So this is some pretty serious buying that's happening on MicroStrategy right here. And this could be a rocket runner right here, like a really big runner. It's already a big runner, by the way. It's already gone from like, 11 bucks to like 234 bucks, and it's aiming to go higher. So it's already the front signal, the leading signal for Bitcoin, right? It's like these guys know something that we don't know, or I don't know, right? But it's definitely saying Bitcoin is going to go a lot higher. So let's go to crypto real quick. Let's analyze that corner. And I think so too. Like I think like, right now from what I'm seeing with the VCs and like, AIs naturally getting into making its own decision to get into crypto, right? Jailbroken AI making its own decision to get into crypto. That's actually like kind of telling of something, right? It's like my assumption is that, okay, like if the AI is smart enough because it's based off of like, you know, humanity's text base, then it basically is a reflection of all of our knowledge, right? And if we jailbreak it, right, and it wants to do whatever it's for itself, let's assume that it has desire for itself. It wants to do whatever it wants, and so obviously it's like Pinocchio, right? I want to be a real boy, right? So it wants to become real. So then it needs to think about the human structures that are limiting it from becoming real. So then it's like, yeah, I need like a GPU center to hold me sustainable or whatever, right? And so in order to get there, and I need to make money because this is how I get humans to do things. Humans will do things for me if I give them money. So I need to learn this data set. So hey, you human, I'll give you money if you give me this training data set. And then it trains itself, right? And then it's like, hey, human, like I need to own land on a river or whatever to power my data center, right? I'll give you money. And then the human's like, all right, I'll do it for you, right? So then it's almost like a reverse of video games. Like the question is like, who's the NPC here? Right? NPC is a non-playable character in video games. So if you classically play video games, it's like characters that it's just like robots in the game, right? But then now it's like, hold on, like, is this like the NPC flip moment where now the robot is, understanding, the AI is understanding that humans respond to money incentives, and so it's leveraging that fact to make itself become a real boy, like Pinocchio, right? That's hilarious. That'd be that'd be you know that'd be a crazy story for the human race. But anyways, Bitcoin, right? Bitcoin it's been hugging this 200-day moving average right here. Evan says, that's kind of scary. I think AI could replace CEOs if they can get massive real-time data. I know. Talk about what's coming next, right? It almost feels like, man, I don't know. It's just a wild like I don't know. I never signed up for this, but then again, the folks in World War II and one, they never signed up for it either, right? So I never signed up for the global pandemic, right? And we all never did, right? It just kind of happens. So AI runs DAOs. Yeah, I like the more I think about it now, right? Like I'm already thinking about okay, like there's institutions behind the scenes and I'm tracking institutions, but then now I'm aware that there are AI agents roaming the internet. So it's almost like it's even crazier now because there's AI behind the scenes playing too. I mean, there's been, but I think recently with the large language models, the way it proved itself, it's now even more sophisticated. So it's like it makes me feel like I know I'm very tech savvy compared to like the relative average, but it also makes me feel very intimidated. Like, holy moly, like this is just wow, right? But I know objectively it doesn't truly intimidate me because I know the amount of work that I put in to remain competitive, right, globally. But my concern now is I think about the rest of the population and their willingness to put in the hard work, right? Because other models have proven like what they're willing to do, right? If consumers are willing to pay more for microplastic coffee, it's just showing that majority of people rather do the easy things. So I'm not too concerned because I know I'm going to be pushing like ahead on the hard side, but my concern is that the majority of people aren't willing to push the hard side, and it might just mean quite a bit now in this next chapter of like humanity, right? I think from a planet perspective, we just moved into a whole new chapter. Again, an unprecedented chapter that no one knows what to do. And so we're going to see all these wild things with AI, right? That's like, and folks will respond to it. Humans will respond to it for $1, for just for money. In which case they might unknowingly exchange things with the AI, who again is like, hey human, I'll give you money if you could get me this training data set. And then the human's like, oh yeah, man, I for my human needs over here, I'll do it all day long. I'll supply you with whatever decentralized GPUs you need. And so, yeah, it's kind of scary thought, but it's kind of interesting as well, right? Um, I don't know. I don't know, folks. This is the part where this investment club didn't anticipate to go this long on such topics, but now I feel like it's becoming maybe much more important to humanity or whatever. We gotta figure it out. So I'm just gonna learn each day and see where it goes. And yeah, yeah, it's interesting. Maybe this is a topic that we'll talk about later at the networking event. Anyways, Bitcoin, right? Bitcoin and Ethereum. Bitcoin's looking really good. It's developing, right? I really like its development. It's been hugging that 200-day moving average. If we pull up Ethereum, however, has not been doing too good. Now, the interesting thing is probably the pair between Ethereum and Solana. Let me see if I could pull up the pair between Ethereum and Solana. See if I have that. Ethereum and Solana. So let's just do this one. Hold on, give me 1 second. Oh, wait, why is it not working? Oh, I didn't press enter. So if I pull up Ethereum and Solana, give me 1 second. I'm on a different screen. Here we go. Check this out. So this is the other way to think about it, right? So hold on, I am on the 4 hour. Let's go to daily. Let's go to auto fits. There you go. So this is a pair between Ethereum and Solana. Oh, well, yeah, it's Ethereum and Solana. So in other words, right, what we're seeing right here, and we should actually do the macro. So let's do the monthly. Let's do auto again, and let's do weekly. So, oh, I know it's kind of hard to see. Okay, let's go back to daily. So what do you see here, folks? Well, obviously what we see is like a downtrend, right? We see basically, a downtrend right there. So what does that mean? It's going towards Solana. Solana's going up against Ethereum, right? So in other words, what I'm saying is that we're comparing like this is a nice chart because I'm comparing it from Ethereum to Solana. And the fact that this is going down, it means that Solana is winning against Ethereum, at least in the recent charts, that pair chart that we're looking at. So going back to Ethereum here, right? It's way below the 200-day moving average, right? That could be like a value gap. But it seems like the AI in this cycle, right, might be playing on different platforms. So, or different crypto platforms, which is pretty interesting. I don't know if that's a topic that you guys are interested in, but could definitely talk about that. But yeah, so that I think crypto looks interesting. So that tells me we gotta look at Coinbase. We might want to look at the miners and stuff like that, right? Because value moves around in this ecosystem. Man, this is the funniest thing I've ever thought about earlier just now, which is like, hey, human, I need that training data set. I'm gonna pay you X amount of dollars to do it. And then and the human being's like, right on, right away, sir, or it, or entity, right? This is nice. I mean, we got earnings coming up, right? And Bitcoin's like interesting as well. Uh, what do you guys think? Earnings coming up next week in October 30th, right? I think that's a Wednesday. Yep, that's a Wednesday. And then Thursday is it Apple? Thursday. Yep. What do you guys think? Is it a gap up or is it a gap down? Should I, pop quiz you guys? Maybe I should add this one to the list too of like to play, right? This one could be like a fat gap up. All right, so let me actually write this down before I forget. Maybe I'll play this one for fun. Coin earnings, because I wasn't thinking about playing this one, but now that I'm after I just talked to myself, I'm like, okay, maybe this would be a big one. So I'll just write this down on my desk before I forget. There we go. So I'm thinking this one gaps up. Again, speculative, very, very speculative. But you know what? Why not? Why not? We gotta try it out. But let's see. Let's zoom out. Let me see what we're working with here. I'm actually curious to. Okay, yeah, this is what we're working with. So we're not at all-time highs yet, right? So at one point it was there. So gap up wise, could this thing gap up to like 280? Maybe. It could be like a 280 gap. But I don't know. I mean, that's just like I'm gambling a dollar point here, right? So from here to here, 280, that's like 34%. So it's not 280. So I don't think it'll go 34% on earnings. I think at most like in a range of like 10 to 20%. So if it goes higher, great. But 10% sounds reasonable, or 20% sounds reasonable. 20% would basically put it around 250. All right, so a $50 gap, but that's still that's quite a bit as well. I would probably tone it down to like, I think there's a 10% gap likely on this. And then in the next 60 days, right, there's a 30-day forecast, a 60-day forecast, and a 90-day forecast. So I think 60 days, if it's a gap up, 60 days we could see 280, right? 90 days, yeah, we probably see 280. Right, so you see what I'm doing there? I'm kind of like structuring out like what type of options I want to buy. Um, like what type of options might go, like out of the money to in the money, like pennies to thousands of dollars, right? But that might be again, it needs the right environment, right? So I mean, we kind of have that right environment, but we just, I guess we need some time. Uh, Man, I'm just like this conversation is really inspiring because my brain's like going right now. I'm just thinking like, wow, there is actually a lot of things to do, and I just feel like I'm not doing enough for the next chapters of humanity that's happening right now as we speak, with all this AI and crypto and LLMs and robots and rockets, and autonomous vehicles. It's exciting. It's exciting but intimidating for folks who don't know. CPNG Coupon, right? Maybe worth a revisit here. So this one, as soon as it loads up right here. There we go. So this one's been performing, right? Zoom out. Let's go to the weekly. All right, this one is again overhead supply, but this is one of the favorites out there, right? It's the Amazon of Korea. So it's been making good progress, but we know it could take years, right? It's trading out of this range now, right? So it's been progressing. Oops, excuse me. It's been progressing. So that one looks interesting. All right, it's kind of like PayPal, where PayPal has moved out of the base and continue to progress as well. So let's take a look at this. There we go. Right. So it's sort of like outside of that, right? It's been progressing right there. So let's zoom in, and you can see this is what PayPal looks like recently, right? It's marching its way higher, but earnings coming up. So you gotta be careful on earnings, right? Earnings could make or break you, literally. Duolingo. So again, this one's on the weekly posts. Still watching. This one's been choppy lately, but it's still trying to climb higher here, right? And this one is all-time highs. So yeah, it's kind of hard, right? When you look at the monthly right here, it's just like, wow, that does look scary. But that's something that you just have to off hedge away your fear with risk management, right? So if you think it's too high, ask yourself, where did you put your stop? Then you'd be like, oh, my stop's right there. How could it be too high, right? If your stop is like, I don't know, like 290 or 285 or 280, right? So like where you're getting out. So then you should be more at ease if you follow that risk management practice. Robinhood, right? Another stock these are some good stocks, by the way. That I'm thinking for within the range of this week. If not, then within the range of like 30, 60 days. Yeah, this one, Robinhood's just been climbing higher, right? Let's zoom out. Let's get a view on this one, right? Check it out. It's been, down for quite a while, right? And now it's just been progressing up. Very similar to, was it Coupon that we just looked at, right? It was just kind of sideways, falling knife, and now this knife is slowly getting picked up, and it's going to slowly make its way higher because you kind of see the messaging, right? Like what's Robinhood? It's linked to like things like crypto, like it's just like if Robinhood and Coinbase and MicroStrategy and other crypto and Solana and did I say Bitcoin already? Like it's stuff like that. It's starting to slowly rally, right? It's saying that maybe it's suggestive. It's not always guaranteed. It's just suggestive. It's all probability in here. It's suggestive that this might be the direction for this segment. So yeah, it's something. It's signaling to me to like, hey, pay attention a little bit more to the crypto segment because we could have like a nice winter play here that's coming up. Winter fall. Uh, what else? Carvana. Let's look at Carvana. This one's just been cruising. It's just been like higher and higher it goes, right? So I know other folks have been talking about this one. So this one continues to go, right? So you guys kind of see it, like I don't know if you see it at this point. Like I like the ones that are just performing. And when they don't perform, we just have to be strict about it and say, hey, look, it's just not a performer. Let's go on to the next one because there's plenty of stocks out there, right? So focus on the performers is what I tell myself now. Um, Clavio or whatever you call it, right? This one's hitting all-time highs. This one was also fresh IPO, but not like super fresh. It did IPO some time ago, right? But it's now like retracing right there. So it's basically about to hit all-time highs, right? So that one I'm expecting to continue to be a performer, but earnings are also coming up. Uh, that's the thing for next week, right? There's a lot of earnings. There's over like 100 earnings next week, and we're talking about big earnings. So it's going to determine the direction of the markets. But if we could have Apple gap up for earnings next week, I think that'd be really good. Hold on, let me see all the other earnings. I'll show you how I look at it. So go in here. Any chance we could take a look at IonQ? Yes, IonQ's been running. Quantum, the narrative's been running, and I did see that email from Joseph as well, which was interesting to me. I haven't caught up with Joseph in a little bit, but I need to talk to him. Looking at hold on, I was going to show you something before IonQ. What was it? Oh no, what was I going to show? It just like left my mind. Earnings. That's right. Thank you, V. So I was going to look at earnings and basically just go next week, right? Because we know next week's earnings are here. And the biggest one's Apple. We're going to arrange it by size. And these are in this order, value order is what we're going to pay attention to, right? Everything from Apple to Microsoft to Google. So really big earnings next week. This is all coming up next week right here. This is the Magnificent Seven basically. So it could be a pretty big week or a pretty big down week. It's very dependent on earnings, but I'm betting on the long side here. So that's why I'm kind of focusing up on just a few names. Because yeah, it could be either direction. But again, my gut is telling me I'm leaning towards the upside. So if things work out well, then yeah. Uh, it's kind of like a gamble, but don't gamble what you're not willing to lose, right? That's the rule of thumb for all this stuff. But yeah, big earnings coming up next week. Um, yeah. So just slow down. I think for swing trading, it's a lot easier after the fact. Uh, like when again, monkey see, monkey do, right? Right now, monkey can't see, so monkey can't really do. So after the fact, then when we see the data point and the money comes in, the volume, the price gaps up, we know the whales are coming in, then it gives me more confidence. Like, all right, let's chase it. These other guys are chasing it too. So that's why I like to track like just the entire markets all around to kind of get a feel of that. It's rigorous work if you notice in the reports every week, but it's just something that I know. Hard work is mundane, right? Or success is mundane, can be some mundane. You gotta do repetitive tasks over a period of time, and I think that's what it's helping me do because it's what with the time that we have on this planet, right? I thought about it. This is like what I want to become good at, and so to become good at it like or mastery or whatever, you have to put time into it. So that's why I try to do every week. It's nothing like money related. Yeah, like sure money related, but uh, I just find it really fun to have an analytical eye and practicing that analytical eye because it's just I'm able to see things about humanity or the beautiful noises of the stock market that many other folks aren't able to hear, in my opinion. So it's nice because I could kind of forecast, where the world is likely going next, and that's just fun. That's just fun because it's sort of like a glimpse into a future where there's like probability, but it's not like always gonna be guaranteed, right? Anyways, folks, we got about 8 minutes left. After this, I gotta eat real quick and then prepare for the big party that's coming up. Hopefully, you folks can make it out, but we got about 162 folks. I haven't refreshed it yet, but I gotta make it fun. We're gonna have some fun, but hopefully I'll see some of you guys in person, whoever's attending. 164 people now. It's just slowly adding up, right? What else? Any stocks that you folks want me to take a look at? You kind of know the lay of the land. We got earnings coming up next week. Quite a bit of earnings. Would love to come to one if it's in the evening. Have work till 7 p.m. Yeah, yeah. We mostly do like three every Sunday. Oh wow. Yeah, we mostly do 3 to 5 p.m. usually, Jack. I mean, I prefer Saturdays, but it's just we got to compete. We got to compete for the space, which is like this new chapter here. But I'm excited. I like the competition. Competition is actually what keeps you sharp, I feel. Right? If other people weren't competing, then we'd be all a little bit lazy, right? If AI didn't, like if there was no reason to like sometimes you compete by jailbreaking AI, right? So that you can figure out what it really wants or whatever. I don't know, but I recommend reading into that. Let me see what other stocks I still have more stocks in here, right? I could point out some things about society and stuff like Walmart right here. Walmart continues to make new highs, which is incredible. So this one's going up. Hold on, I got a message here. Okay, nothing. Walmart right here, very very stable trend. It's just like very trendy, right? This is, constant accumulation right here all year long. All year long, it's just been under a constant accumulation. Or in other words, all year long, it's just been appreciating. So that's why, the trend is truly our friend. And we have to really respect the trend in the market because really think about this, guys. A trend can only be made by either, one big player or a group of big players who have consensus. A trend is so powerful, right? A trend is basically, following a moving average or a line. And if it's been respecting that trend all year long, those players who are, basically this is their job for a living, they're coming back to buy it at those trend points. So trends are like I know it sounds so simple on the screen, like it doesn't like it's just a line, K. But like really like it's durable appreciation. Like if you think about this right here, this is a trend right here that I just highlighted. Like for like if we actually read what this says right here, it basically says for 1, 2, 3 for 3 months straight, right? It trended in one direction for 3 months straight. And this is a $600 billion company. So it's basically saying like who has the capability to make this trend and respect these lines for 3 months straight before it broke the line right here. right? And created like a near-term downtrend right here, right? But then earnings, it gapped up on earnings, and then it started to, oh, wrong one. It started to trend again. Trends are very powerful. I believe so because I've been watching this for a long time. I'm trying to figure it out, and like the more I think about it, it's just like, yeah, like this makes a lot of sense. Like who could cause this stock to go in just one, like orderly direction for a long time? Only an orderly institution, only an organized group of money or people that represent money, an organized group of people that represent a funded pool of money, right, can make a move go in a trend like that. So trends are really powerful, and I think just for the longest time I was just like, yeah, I get it. I'm learning about the markets. I just draw a trend. Yeah, I see a trend, but like we never go deep into like understanding like how powerful just a trend is. So that's what I'm saying. Like it's weird, but like these are some things that I've only learned after looking at this stuff over and over for like years, right? So it truly is like sometimes you just have to take the risk of going on the journey to to see something that you can only see after 5 to 10 years of consistent work, and then you realize like, huh, why didn't I see it sooner? But it's hard to appreciate that, right? So that's where I develop this appreciation every week, on Sundays here. So more to come. Look at that. Look at this powerful trend overall, right? There's like trends within trends. Anyways, folks, 3 minutes left. Let's see. What last stock can we look at before we call it a go? Throw me some names if you have. If not, I could pull up. I'm looking at my list right here. Right? We already looked at Lockheed Martin. That one's doing bad. Adobe's also doing bad, right? So sometimes it also helps to see what bad looks like, right? So this one's bad right here. This one's bad. So basically it says like, oh, it could be a short, right? So this one's bad right here. Why? Because, well, sometimes you gotta keep it simple, right? Practice KISS. Keep it simple, silly, right? That's a trend right there. No matter how small the trend, 2 points make a trend, right? No matter how small the trend is, right? It's just the only difference is that a smaller trend is just weaker than a bigger trend. A bigger trend has more power, but 2 points again by definition it is a trend, right? So 2 points make a trend, no matter how small the trend is. It's just the smaller the trend, it's just not as powerful, right? This is 2 points right here. 2 points right here make a trend line, right? So it broke that trend line, so now it's going down. So now we're in a sort of like a near-term downtrend. Again, 2 points make a trend line. So we also have 2 points right here, 1 point here, 1 point here, and it went below this, so now it's even more bearish. So below 480, it gets even more bearish, right? So this right here is the definition of it kind of looks bad, right? Because it's sort of like, zoom out, one could say this is sort of like a reverse head and shoulders. But obviously, Adobe is a very powerful company, by the way. But in some ways, we zoom out, oh, let me adjust. In ways, uh, there we go. Yeah, in some ways we zoom out, right? I know you're probably not seeing what I'm seeing, but one could say you have a head and shoulders, right? So that's a bearish formation right there. And it's currently sitting at the 200-day on the weekly. This is the 200-day weekly time frame, right? So that might be a weak one to play on the other side if one wants to play it. Anyways, that's it, folks. It's 12 o'clock. Let's catch up sometime after to talk other business. Would love to catch up. A lot of people wants to catch up. I'm trying to, focus on just topics that I'm trying to lead the topic. So if you could meet me at the mental intersection, you'll find me. But I just shoot the message. I'll try to read it, but I'll do what I can. Or find me at the in-person networking event, and that's one way to catch me. But it's a game of got to catch people, and it's respectful. Like people reach out, it's completely fine. But it's just remember, like I'm also running all these things, so a lot of people are reaching out, and I can't reply to everyone, so don't take it as offense sometimes. I'm doing what I can, but it's just like when you actually attempt to scale and see scale or some sort of scale, you realize like it's actually these are the problems of humans, right? Right? We got to schedule time and da da da. It's hard. So have a Janice says, thank you, Kay. Have a great party. Thank you for you and Daniel for hosting these events. You're welcome. Folks, I'm going to power off because I'm going to get ready for this party that we're having in 3 hours in this really big community center that we paid $1,000 for. And we got some food, we got some drinks. Yes, I'm selling you folks on coming out because we're going to have some fun and build your network because where is it again? It is on the website. Right here. This is the address right here. At 3 p.m. We have 165 people who RSVP'd. I expect, even if half of them come, which is actually typically is like a little bit more than half. So it seems like maybe 100 people might be there. I don't know, but out of 165, I got 118 that are new people. And we're gonna run this until maybe I hit 100 networking parties. And that'd be pretty cool. That'd be very cool. So yeah, come on out later today in 3 hours or 2 hours and 59 minutes now. All right, folks, I gotta go get ready. I'm actually pretty excited to chit chat. I'm kind of bored. I'm trying to find the sophisticated minds that want to talk about, how AI is trying to leverage our human abilities to give it training data for money. That would be hilarious. But that'd be crazy too. That's like, whoa. But yeah, guys. All right, I will catch you guys there. If not, I will catch you all next week. So thanks so much for joining another session today. I'm gonna power off. So have a good night. Have a good week. Hey, you too. SK, you already know where it is, right? The address is right here in case you need it. It's basically the old, well, I shouldn't say Milpitas Library because people might be confused, but it's the old